Joining me now is former Boston Fed President Eric Rosengren. Eric, good to see you. So I think of the Beige Book as being sort of like an intelligence briefing from across the Fed districts. What's the buzz on the street? What are business people concerned about? What are they excited about? Is that right? And what highlights jump out at you from this particular report at a time of a lot of policy uncertainty?
So it's a qualitative assessment, but it's used in conjunction with the harder data that we get from other sources. And so I think it does provide some useful information. I think it highlights that there's growing concern in the business community that tariffs are actually going to happen, that they may be more significant than those people who thought they were only going to be a negotiating tool. And that if that is going to happen, that it'll be more disruptive to their plans for the coming year than many had anticipated.
Is there any chance that expectations of tariffs being disruptive or inflationary, kind of like inflation expectations, can turn out to be self-fulfilling prophecy that, well, if my contacts, if my customers expect prices to go up and then tariffs come into place, well, that means I can raise prices?
Well, I think that's one of the things the Federal Reserve is going to be concerned about. First of all, tariffs are likely to increase prices for many goods that are affected by the tariff. And in some instances, while we have a 1-month delay for autos, you could easily imagine that autos are not only going to be subject to the tariff tax, but they're also going to have supply constraints as the difficulty with their logistics become problematic. So I think that the prices are actually real. We've already seen some prices starting to go up. There's some areas where we're likely to see prices go up actually relatively soon. So if you're thinking about foods and vegetables from Mexico that haven't gotten an exemption, you don't keep a large inventory, they're perishable goods. The result is that the flow through to those price increases is likely to be relatively immediate. Then there are other goods where firms are able to stockpile or it will be delayed before the shipments actually occur. Those will be price increases will be occurring over the next 6 months. But the bottom line is that I think firms are going to be expecting to pass a lot of the prices along to consumers. And even those organizations that produce domestically, since their competitors are international competitors, they're probably going to see this as an opportunity to have more flexibility to raise prices as well to improve their profit margin.
Okay, so we've been throwing around this word stagflation, this term here on CNBC and in economic circles. Not every viewer is familiar with it or maybe associates it with Japan. It's one thing if prices are going up or if your dollar doesn't go as far at a time when overall the economy is growing. Another if it's not. What's the threat of stagflation at this point, and what do you think would make that threat more serious?
Well, I think the threat of stagflation has gone up significantly. So stagflation is just that prices and inflation are increasing at the same time that you're seeing enough disruptions that unemployment rate goes up at the same time. So that's not what we've been experiencing over the last 20 years in the United States. But I do think the combination of tariffs and some of the immigration policies are going to be very challenging for a lot of businesses. And I do think that some businesses faced with a lot of uncertainty are going to slow down the hiring. And in fact, we have some pretty hard data that the hiring rate was already declining prior to the concerns arising from the tariffs. And I think the hiring rate's going to continue to fall. We had a pretty weak ADP report, which is a pretty noisy estimate of what the employment report's going to be. But the ADP report had only 77,000 jobs, and it was disproportionately weak for small businesses. So I think it just highlights that we're in an environment where consumers could be hit both with price increases, but also have a rising concern that they'll be facing unemployment, not just for federal workers, but for people that are working in the private sector as well.